In this video, you're going to learn about mortgage fraud, credit, personal finance, and why you need to be aware of who you follow on social media. We have Raphael, Vargas, and Bandman Kevo, who are a match made in heaven. Raphael left the real estate game to begin promoting every get-rich-easy scheme on social media, which is perfect for teaming up with Kevo, whose audience wants quick riches at any cost. These two guys have large personal brands and make a lot of money. They are very influential on their followers. As you'll see in this video, there's a lot of flaws in the promotion of their knowledge.
Why is credit so important? Even if you're in real estate, or it doesn't matter what you win, why is credit so important?
I do like that Kevo is helping people improve their credit. An example of why good credit saves you a lot of money is when we look at a $300,000 mortgage. The difference between 3% interest rate and 4% interest rate is around $50,000 for the entirety of a 30-year loan.
Credit is so important because the whole goal to real estate is not really using your cash.
Kevo contradicts himself. In the same sentence, he says credit is important because in real estate you want to use other people's money. Credit is irrelevant if you're using other people's money to finance your purchases. This is commonly referred to as raising private money. Kevo is just regurgitating random buzzwords he's heard from gurus like Grant Cardone, but has no idea what he's talking about with real estate.
You want to basically take the percentages that real estate offers, like as far as banks. So for instance, let's say if you have a credit score of 800 with a $100,000 credit limit.
A 100K credit limit will either be business credit or personal credit. Business credit will not be evaluated or will not show up when the lenders pull your credit if you're qualifying for a loan on a primary residence. With personal credit, the credit limits will show up on your credit report and lenders will calculate the minimum monthly payment if you were to use all $100,000 of credit at one time, because lenders are always evaluating their downside risk if you spend all of the money available to you. You're going to need to qualify for the loan if you spent the full $100,000 of credit. The credit card's minimum monthly payment will be calculated as debt. Credit cards will generally have a 1 to 3% monthly minimum on credit usage, so that could be $1,000 to $3,000 per month added to your debt to income ratio. Good luck qualifying with that debt on your DTI.
You want to basically take the 3% to 10% that you put down on a home and own the home off that small percentage while you're paying notes.
There are conventional loan financing products for 3, 5, and 10% down. He's correct. These loans are generally for first-time homebuyers and allow for a debt-to-income ratio of about 43%. In his example of someone who has high credit limits, they're going to need a very high income to qualify for a mortgage with that low of a down payment. Lending has begun restricting a bit. Lenders are a lot more difficult on qualifications right now than they were in years past. Qualifying is not as easy as these two make it seem.
That's why real estate agents be so thirsty for people to buy homes, because even if you put down that 10% or that 5%, the banks are still going to pay them for that home with your percentage down. You just will owe the bank. So
agents do provide a lot of value in a transaction because most homeowners have no idea how to value their property. Zillow is not a good resource. They also rarely know what needs to be done in order to get the house sold, what to price the house at, how to negotiate, or how to deal with any disclosures. The good thing about having a real estate agent is they'll protect you from the advice you're about to hear.
So if you put 3% down on one building and you still have all that $300,000, $400,000 left over, you can take another 3% times 50 and you own 50 new units. You get it?
I love Kevo's face at the end as if he's saying something wise.
And you own 50 new units. You get it?
That's mortgage fraud, Kevo. What makes this even worse is Raphael knows real estate investing and financing, but didn't jump in because he cares more about these get-rich-easy conversations than actually helping consumers. Whenever you put 3 to 10% down on a house, the requirements are that you live in the house for at least 1 year as your primary residence. If you are trying to game the system and acquire investment properties with 3 to 10% down, then you will be found very quickly. You wouldn't even be able to get away with it. Kevo clearly has a ton of experience working with mortgage lenders. When you apply for a mortgage, the lender is going to analyze all of the debt reporting on your personal credit. They will see that you have a current loan of 90 to 97% LTV and the loan was obtained within the past year. They will not approve you for a new loan. This scenario legit will never happen in the real world without seller financing. Even if Kevo misspoke and meant acquiring these loans after 1 year of living on the property, attempting to acquire the second home will be very difficult since you'll have large amounts of debt on your credit report. short. The current property and the desired property will both have higher interest rates, a large monthly private mortgage insurance payment, and both will count towards your debt. Given the borrower will still need to be under 43% DTI, they will need a reasonably high income to qualify for a second mortgage. Trying to do this a third time won't happen. I hope everyone watching understands how easy it is to be a fake guru. You just make it sound so easy to acquire 50 new units if you follow my advice. All you have to do is leave out any important detail about qualifying for loans.
So that's how you were able to build like your Airbnb portfolio. Like
Raphael was a legit wholesaler. It disappoints me that he didn't step in and mention that what Kevo is promoting is not possible. He used to coach real estate wholesaling before a falling out with the creators of the program, and then he left the real estate game for good because selling get-rich-easy schemes is easier. This Airbnb scheme is literally not possible. You can't attain a mortgage with 3% down and use for Airbnb. If Kevo is doing that somehow, then he's committing mortgage fraud and teaching you to do the same. Kevo made his money scamming millions of dollars. He isn't this huge influencer without the scamming. To me, scamming is theft. He stole money and now presents himself as this investment guru. The reason why I care is because the people who follow him are looking for ways to advance in life and are being given the wrong information. Kevo partners with people to hide his money and is why he probably does have a large investment portfolio, maybe even a lot of Airbnbs, but it's all from scam money. If you follow Kevo and haven't scammed for millions of dollars, it's going to be difficult reaching his level. Following his advice on Airbnbs will get you in trouble.
And he was telling me like, bro, I'm getting Airbnbs in this building so it can pay for my penthouse that I'm about to live in.
It's funny all the hate I got when I just said that Kevo would help his audience a lot more if he was more transparent. To the misinformed, he gives off amazing advice, but he doesn't give any good advice with real estate investing.
So like, what does Grant Cardone talk about? Same thing.
You basically, your whole goal should be letting your liability, your assets should pay for your liabilities, basically. You know what I'm saying? So
I feel like Kevo is reading off a script from a generic entrepreneur business book.
Why not just be smart? So I figured, let me go ahead and get an Airbnb first, learn the building real well, and then all the money that I'm making off the Airbnb, let it cover the penthouse. You get what I'm saying?
What does that even mean? He bought an Airbnb to understand a building? If you're a real estate investor, you do your due diligence before buying an investment property or getting a penthouse.
The fastest way to build your credit is knowing people who has high limit credit cards. This is I'm telling y'all a secret. High limit credit cards, meaning if you know somebody who have $100,000, $200,000, $300,000 credit card, and they're willing to make you an authorized user on their credit card, you inherit their limit.
Kevo is right. The quickest way to boost your score is to become an authorized user on someone else's account. Kevo is all about credit cards, right? Well, he doesn't explain that FICO 8 is the main score used for credit card lending. Lenders are able to see that your boost in credit score comes from being an authorized user and will eliminate that boost from qualifications. This practice is known as piggybacking, and lenders have figured it out by now. The purpose of a credit score is for lenders to have an idea on the risk of a borrower and how likely they are to pay back the debt. Since this conversation is about mortgages, mortgage lenders will see someone's credit score being propped up by authorized user access and will want to know what is your credit score without the authorized user hack. They want to evaluate your creditworthiness based on primary lines. Even though mortgage lending still relies on FICO 2, 4, and 5, it's unlikely you'll be able to use this hack to beat the system. Piggybacking authorized user hack boosts your score quickly but doesn't help you attain any funding. But I'm sure Kevo knows that because he's an expert.
After 2 weeks, Experian is going to update your credit, and then they're going to start recommending these cards as pre-approvals to your credit, and then you will apply for the same credit card that you borrowed from your friend that hit $300,000. You're going to get that credit card.
Credit Karma and any of these apps will recommend credit cards to you based on your score, but that's their business model. What matters most is when lenders run your credit and analyze your FICO 8 score and see that your personal credit is terrible without the authorized user access, then they will deny funding.
So now it's like a free $300,000.
Kevo, please stop with the nonsense. Lenders don't just hand out $300,000 of credit because you were an authorized user. They're going to evaluate you on your primary lines. If the highest credit limit you have on your personal primary lines is like $5,000, you're not all of a sudden getting a $300,000 credit limit.
That's why when people turn 18 years old, their parents put them on a $500,000 credit card, and they basically gave them a free $500,000. You get it's generational wealth.
Fairly confident generational wealth has nothing to do with credit cards and authorized user access.
You can also, like, you don't have to find somebody. You can actually buy these.
Sir.
So where can you buy this stuff?
So TradeLineSupply.
TradeLineSupply.com.
Be really careful doing this as lenders are beginning to crack down on this practice. This isn't a scam, but there is a risk of trying to game the system.
You mix a trade line and the primary together, you unstoppable.
Kevo is right about this. Occasionally he knows what he's talking about. I personally am very much against a lot of the lending practices in the financial sector, so I'm all for helping consumers better their credit score and pay less interest on their loans.
How fast can you do that?
This takes 2 weeks.
That's crazy. 2 weeks, you can shoot up 200, 300 points.
Yeah, that's called a credit hack.
Wow.
A lot of people,
The underlying problem is that a borrower still has their bad credit. If they haven't cleaned out the reasons why their credit was poor in the first place, then their new score is irrelevant because they aren't going to receive funding. They should go through credit repair for a few months and then focus on building credit by traditional means.
a lot of people don't tell you this. This is a very crazy secret. You know what I mean? Because the old school way is just paying your bills on time.
Kevo is definitely right. We are not taught anything about credit because the people teaching us growing up knew nothing about credit. This is an industry I've been studying deeply for about 8 months now, and it's one of the most important aspects of our financial lives, and yet very few people know more than the surface level concept of personal credit or business credit.
You're basically disputing the stuff that's on your credit because credit bureaus make a lot of mistakes. So when they make mistakes, they deal with a whole lot of people. You can send in these letters, and if they don't get back into you in a certain time, they legally have to remove this stuff off your credit.
Kevo was right about this. If you ever see the credit repair businesses, this is what they're doing. I'm a real estate agent, so it's likely that I'll start a credit repair business to assist home buyers with improving their credit so they can save tens of thousands of dollars on their mortgage sometime later this year. It's a good business to start.
So if you have a $300,000 credit card and you're not barely using it, like let's say if you're getting gas on it, they're gonna send you a $400,000 and $500,000 credit card because they want to keep trying to get you to use that credit because that's how they get paid.
This is false. The only time your credit limits will be increased automatically is when you're routinely maxing the card and paying the balance off immediately. If you're just using a card for gas, there's no reason for the bank to increase your limit. During times of lending restriction, banks have been known to actually reduce limits on cards that are seldomly used.
So check this out. If you get a $200,000 line of credit, you could buy so much real estate. Imagine this. If you buy fix and flip properties, you're putting 10% down on a hard money loan on a $200,000 house. That's 20 grand. That's 10 houses. You got 200,000 in credit.
Raphael, come on, man. This is what I hate about fake gurus. They live in a reality in the clouds where they just forget that actual lending standards exist. Number one, hard money lenders are going to want more than $20,000 down. Number two, your debt to income will be insane if you go out and buy 10 properties with $20,000 down and no one will lend to you. Number three, Raphael is explaining how to be 100% leveraged on house flipping. Using a credit card and a loan is recipe for disaster if you aren't very experienced in what you're doing. Number four, the borrower wouldn't have any working funds for the rehab. This clip was the perfect summation of Raphael now. Ignore objective criteria for obtaining loans and hype people on what's not even possible. I hope it's becoming obvious that it's way easier to be a fake guru promoting get-rich-easy schemes than it is to be someone who's transparent. If we ignore lending standards, just go out and magically get $500,000 of credit cards, put the credit card funds in the crypto market, 10x your returns in 2 weeks because I know an expert who makes millions doing this, then we'll all be millionaires next week. It's easy to sell hype. The moral of the story is be careful who you follow on social media. Thanks for watching.